All right. Hello, everyone. My name is Mark Hodge, head coach at Rockwell Trading. Here's what's happening in the markets today, Monday, July 19th. Now, let's jump to the charts and let's first take a look at the S&P here. S&P and the other major indices finished lower last week, dipping for the week and also finishing down on Friday. The S&P seeing two back-to-back losing days. And if we go to a 5-minute chart, it really tells the whole story here. After a higher start, we pulled back, went sideways for a little bit, and really just sold off into the afternoon and also into the close. So it looked like we could get let's put it this way. There was some weakness going into the weekend, finishing the day near session lows or at session lows. The NASDAQ also snapped a 2-day losing streak. The NASDAQ had it worse for the week. They actually saw its worst week since May. So NASDAQ, S&P down, all lower. NASDAQ with the worst week last week. Now, looking at the open, heading into the open today, futures are pointing to a lower start, and it's, I'd say, rather substantial, just because the NASDAQ's down 0.9%, even the S&P down 1.1%, the Dow right now leading the way lower, down 1.4%. So this is a pretty decent slide, and we could see that it's kind of similar to what we saw last week. Or last Friday, where markets overnight just kind of opened a little pop higher, then sideways, and now just sliding into the U.S. Open. Well, we'll see if we find some support here and if we can see a reversal or even just bouncing back a little bit, working away at the losses that we've seen overnight. But so far, we're looking at a lower start that's a little bit more than just a small down day. And we'll see if it continues or not. Now, big picture, moves like this are healthy for even a nice bull market, right? I mean, we look at, let's go to the S&P 500 actually. Look at these pullbacks, right? Going back to October, you have a nice little rally. You get the pullback, rally again, pullback, rally, and then just taking off. A little indecision here in May, pullback, small pullback here in June, and a little dip here on July 8th, but we really haven't had a decent pullback here, a retracement since May. So it's good to have these little shakeouts every now and then. We just want to make sure and just be aware of what's going on in the market. I don't see this as a huge shakeup, and now we're entering a bear market at this point, but it's a little more than just a small down day. Why are we lower? Well, it really seems like it's all about COVID-19 and concerns about the growth in the economy, right? The Delta variant is becoming an issue all over the world, and according to the CDC, in the U.S., we're averaging 30,000 new cases a day. Now, this compares to 11,000 cases a day a month ago, so triple what we saw a month ago, when everybody was eager to put COVID behind us and reopen, not worry about what we've experienced throughout the pandemic. And it seems like, at least for now, there's a couple other bumps in the road before we get full, just everything taken care of COVID wise. So that's putting a little damper on the markets. And this becomes apparent when we look at stocks like airlines, right? If we do have other concerns and there's travel restrictions that could impact airlines, let's look at AAL, and you see American Airlines down 5%. So really outpacing the broad market dip, right? We're down about 1% looking at futures, and American Airlines is down 5% as we head into the open. We could look at Delta, DAL, the ticker, Delta down 4.3%. And if we look at UAL, United down 4.6%. So, I mean, looking back here, there's been a pretty decent slide going back to the beginning of June. This just continues here for the airlines. And this Delta variant and COVID would potentially have a big impact on the airlines just when it looked like travel was increasing substantially. Let's look at cruise lines. Cruise lines also affected. CCL, Carnival, down 5.3%. So down 5.3%. We also can look at Norwegian. Norwegian down 5.5%. Gosh, if we look at the chart here, in pre-market trading, we're touching 2186. So this goes back to lows that we had back in February, really, erasing any progress that we saw this year. Actually, looking back to the end of last year, that's where we last saw these lows in Norwegian. We could look at Royal Caribbean, RCL down 4.6%, dipping down into February low territory. So cruise lines taking a decent hit this morning as we head into the open. A few stocks that would be hurt by global economy issues. Let's look at Caterpillar. Caterpillar down 2.6%. So not quite getting the hit that we see in the airlines and cruise lines, but down 2.6%. Caterpillar trading around 202.50, back at levels that we haven't seen since February. We could also look at Boeing. Boeing down to 211.40, so down 2.9% in pre-market trading. So definitely across the board dip, and it looks like futures going to be down about 1% as we head into the open. And we'll just see if this carries over into the open, if it accelerates, or if we get a little buying after the weekend. Now, oil and oil stocks are on the move as well. Let me pull up crude oil here. Crude oil, we talked about this where there was this real nice run up because of demand, and then there was some uncertainty with OPEC Plus and the UAE. After that uncertainty, crude oil's fallen a little bit. It's at 69.16, back below $70 or $70 a barrel, which is back to mid-June prices. And there was an agreement with OPEC Plus, so OPEC Plus has agreed to begin phasing out production cuts. So that uncertainty is gone, which would mean potentially more output, and that coupled with growth concerns is sending crude oil lower, down 3.2%. And as I mentioned, this is kind of carrying over into some energy stocks, so like XOM, ExxonMobil. Here, let's see where this pre-market trading puts this stock. Yeah, down about 3% here. So just around these levels that were established back in April. We could look at ConocoPhillips, COP is the ticker. COP taking a bigger hit, 4.4%, also back at May, April levels. So just really a decent pre-market slide as we kick things off for the week. But that creates opportunities. Let's look at a few movers here, and let's go to AutoNation. AutoNation up 0.4%, which isn't a big deal, except with the markets down. If this was, if we had a positive start, this could be much higher. They're higher today, outpacing the overall market because they reported some solid earnings. $4.83 a share versus a $2.81 estimate. The revenue was also better, with same-store new car sales up 42% from a year ago, and used car sales up 37%. So just a little higher in pre-market trading, but I think that this move here is being weighed down by the overall market, because that's some, those are some good numbers, solid numbers for AutoNation. Another earnings stock today, Tractor Supply, Tractor Supply, the ticker's TSCO, down a little over 3% pre-market. Now, Tractor Supply, they also had an earnings beat. They reported 23 cents better than expected with $3.19 earnings per share. Their revenue's better, and they raised their full year outlook. So positive earnings from Tractor Supply, but not really showing in the pre-market drop of, well, this is kind of moving all over the place, but 2.7% to 3% pre-market right now. A few other stocks. Now, Tesla, it'll be interesting to see where this EV move takes us, because EV stocks in general have taken a little bit of a dip recently. I mean, we see Tesla down 1% on Friday, down 2.4% pre-market. We could look at NIO taking a little bit of a hit, down 4.3% pre-market. But Tesla, they announced that they're now offering a $199 subscription for their premium driver assistance service, which seems to be very popular. But prior to the subscription, you had to pay $10,000 for that upgrade. So that could draw many more customers into the subscription program, and that's big news for Tesla owners. Not reflected in the stock price right now, but a big deal for Tesla and Tesla owners looking for that premium driver assistance option. Now, XPeng, the ticker is XPEV. There we go. Down 2.8%. They announced that the price for their P5 sedan for that base model of theirs is going to be $24,700. So a huge difference compared to some of the other electric vehicles, and well below Tesla's Model 3, which actually has increased recently and is now $41,190 for that base model. So XPEV not showing at pre-market, down 2.6%, but coming out with a very competitively priced electric vehicle. So a couple of movers, couple of stocks to watch. This is what's going on in the markets. I did want to take a look at the economic calendar before at the beginning of the video, but we did not do that. So let's do that now. A quiet week for the economic calendar. This was over the weekend, Sunday, OPEC meetings, and eliminating any low impact reports. We just see crude oil inventories on Wednesday, unemployment claims. This happens every week on Thursday, an hour before the opening bell. And then on Friday, we have flash manufacturing PMI coming out 15 minutes after the U.S. Open. But a very, very quiet week when we look at the economic calendar. That means that it's going to be all about earnings. So earnings will be driving the market, and of course COVID, and we'll keep an eye on that. The last dip that we saw over the last couple of weeks came when Japan announced their state of emergency and spectators were banned from the Olympics, and it seems like this is creeping up more. So of course that will be a mover for the market. But let's quickly take a look at some earnings that will be released. Here we have this was before the open, but IBM reporting after the close tomorrow. Philip Morris reporting before the open tomorrow. There's a few others too. I know that Netflix is reporting. Yeah, Netflix after the close tomorrow. United Airlines after the close tomorrow. You have Coca-Cola on Wednesday. Johnson & Johnson. Just quite a few earnings releases this week. In fact, 9 stocks out of the Dow 30 will be reporting, and 76 stocks out of the S&P 500 will be reporting this week. So very active week for earnings. Keep an eye on those earnings. That's going to be a big driver for the market, and we'll see if positive earnings can offset some of the concerns over COVID and the Delta variant. But for now, we'll see where things go today. Looking forward to some nice trading opportunities. We'll leave it at that. Have a great rest of your day, and happy trading, everybody.